You've taken additional provisioning during the quarter which led to fall in profitability. Is this related to any particular segment where you are witnessing stress?
So to answer your question, we have declared a profit after tax of 267 crores after providing 115 crores of additional provision. The reason to provide additional provision was twofold. One is to make sure our net NPA remains below 1, which is a universal bank condition. I mean, at least the application of universal bank does require us to maintain that. Second, it also improves the PCR, which is now at 67.4%. And a healthy PCR tells all investors that, listen, the bank is providing in advance, so less challenge in the future because we are well provided. And I must say that the reason for increasing PCR is largely unsecured book, which is the microfinance book. We have this time also added a bit more to the PCR of the secured book, not for expecting any trouble. Our secured book is performing extremely well. We were told by a few analysts that if you increase your PCR on the secured book, you will be literally in the same range as some of the peer group that they have seen. So we decided that we'll take the PCR of the secured book to 30%. It was closer to 18% last time. Our PCR for the bank's unsecured book is 88%. Our PCR of our BC book is upwards of 90%. So we are very well provided for the stress which has already occurred. And I do think, given that we have seen the peak of our MFI stress in the first half of this year, we would not need so much, if at all any, additional provision in the second half. But what our viewers should expect, our net NPA will remain 1%. That will be our base condition.